Welcome, everybody, to Tokens of Wisdom. I'm your host, Dave Rothschild, and joining me today is my good friend, Harry Shillingford. He is the, hold on while I check my notes because I wrote this down because the name is so long, co-head of America's prime brokerage sales, outsourced trading, and capital introduction at Marex. Did I forget any words there, Harry?
No, that was perfect. Thank you very much. Appreciate the invite and look forward to being here.
Well, I'm so glad you agreed to join us. Why don't you give everybody a quick intro of yourself and of Marex?
Yeah, by all means. As Dave said there, I'm co-head of prime brokerage, outsourced trading, and cap intro here at Marex. I work alongside my colleague, Bobby Croswell, who is in New York. I'm here in San Francisco. Marex is, by way of background, the 8th largest futures commodity broker in the world, and our business sits inside of that as a equity options fixed income prime broker that was actually spun out of Cowen 2 years ago, post the TD acquisition of Cowen. So I lead our efforts along with Bobby here in the US, focused on new prime brokerage and asset manager clients, and then working with them either in a prime brokerage perspective, outsourced trading perspective, and then providing our capital introduction services to those clients that are in need of that here in the US and globally as well.
Excellent introduction. I appreciate that. So I guess my first question is, I hear the word broker a lot, right? There's prime brokers, there's introducing brokers, there's executing brokers. Can you quickly break down for me, what are these various roles? Are they different?
Yeah. When you think about prime broker, I mean, the traditional services a prime broker are providing are custody clearing of securities, right? Introducing broker and prime broker, we can sort of speak about that. But a prime broker, in a sense, is providing a custodial solution for an asset manager's assets. Prime broker traditionally deal with public traded securities, equity options, fixed income. We do not deal in private equity and those types of transaction or private securities. The difference between an introducing broker and a traditional prime broker is an introducing broker, the assets of the client actually do not sit on the introducing broker's balance sheet. They use the balance sheet of a larger custodian behind the scenes to custody and clear those assets, and then provide the higher level of prime broker services on top of that, i.e. portfolio reporting, trading solutions, capital reduction, research, whatever it might be. Marex is unique in the sense that we are not only a self-clearing broker-dealer in the sense that we provide prime brokerage services off of our own balance sheet to clients, but we also leverage the introducing relationship of Pershing, which is Bank of New York Mellon's custodial arm, and Goldman Sachs, which we all know is a bulge bracket firm, right? So we can go to a client and provide them a multiple custodial solutions for them, depending what their assets they're trading, depending on their portfolio construction, and then decide with them what's the right fit for them. And obviously, depending on what a asset manager or hedge fund is doing, those will be integral decisions in terms of what's the best fit for them.
Got it. That makes sense. So an introducing broker, it's almost like my fund is too small. I can't get an account at, Pershing, for example. So I come, or Goldman or whatever it is. So I come to you and you kind of open that door for me. Versus a prime broker, you're actually custodying my assets are sitting on your balance sheet and you're holding them directly.
Correct. And it was born in sort of, 2008 world, right? Where a lot of smaller accounts were looking to get away from the bulge bracket pre-Bs. The bulge bracket DVs weren't really servicing the smaller accounts. And this was a way that a smaller firm could get into the business, didn't have the balance sheet to be a prime broker, but could leverage those larger banks and present to the client, hey, you have the safety and soundness of Pershing's balance sheet, because even if we go out of business, hypothetically, your assets are sitting with Pershing, so they're safe, right? So, But at the same time, you're getting the ability to go to an end investor and say, I've got the safety and soundness of Goldman or Pershing or whomever as my custodian for your assets.
And yet at the same time, you're getting the higher end, personal touch service of the...
Correct. Right. I mean, for example, let's say we have a $20 million fund. Goldman may not always be interested in every $20 million fund, but if they introduce through us, Goldman's perfectly fine custodying it, because Goldman technically is not doing the day-to-day work directly with the client and answering their questions. They're facing off at us, and they view us as sort of one large asset manager, if that makes sense.
Yeah, that does make sense. And so Marex sits, I think you described it as in a unique position as being, both offering prime brokerage directly to clients as well as having that introducing relationship with Pershing. Is Marex the only one that does this? Are there others?
There are a few others. I think Jefferies has a similar relationship where they have a Pershing relationship. They also do most of their business on their own balance sheet. But I think, through some crises, they've added in Pershing as a backup and a safety and soundness perspective to support clients, when they were nervous per se.
Yeah.
The all more traditional introducing primes that do not have their own balance sheet would be the BTIGs, the Joneses, the MS Howells of the world. And then if you think all the way down to a self-clearing prime broker would be Interactive Brokers, but they lack the larger boutique services that you would get from a higher level institutional prime broker, such as ourselves, Jefferies, BTIG, Jones, whomever it might be.
Got it. And so from the customer experience standpoint, let's say I'm a new fund manager and I come to you. Do I care if my assets are sitting on the Marex balance sheet or the Pershing balance sheet? Is it a cost question? Is it a question of what I'm trading?
It's usually a question of what you're trading and how you're trading it. And then the portfolio construction in terms of your gross exposures and your net exposures, right? So, on our own balance sheet, we can only clear US equity and US options right now. So if the portfolio has fixed income instruments or international equity, it probably doesn't make sense to have two custodians to service this one fund. It may at a certain size, but let's just say $25 million, it doesn't, right? So we would say probably makes more sense to put that at Pershing or hypothetically Goldman. Each one of the custodians do things differently. Obviously, using our own balance sheet, we control the risk, we control the margin. It's a direct conversation with us when we're speaking with clients. Pershing has a very wide depth of international markets they can custody and clear in. So for clients that are an international portfolio or looking at certain things like that, that's something where we might point them to Pershing. And Goldman is somewhat international, not nearly as deep as Pershing is, but also is very sophisticated when it comes to their margin calculations. So for a fund that's looking to leverage 3 to 4 to 5 times, Pershing is not really comfortable getting there from a margin perspective via our introduced relationship. But Goldman is, based on the risk tools they have in place. They can look at a portfolio, dissect an ETF, look if you're long an ETF but short one of the components, they're going to match those off. Pershing's margin systems are not going to calculate things in that way.
Interesting. Okay, so I'm kind of clear on the introducing versus prime, how that relationship works and what the difference is. Let's go upstream and talk about some of the more high touch services that you mentioned. So it's cap intro, outsourced trading. Are those the two main ones?
Yeah, I would say so. Outsourced trading is a little unique in the sense that working with an outsourced trader, outsourced trading providing firm, you don't actually have to prime your assets with them, right? The majority of our outsourced trading clients actually prime with the bulge brackets.
Oh, interesting.
They tend to be larger funds from 100 to multiple billions where they haven't hired a trader. We're actually seeing most new funds these days are not hiring a trader day one. Technology has alleviated a lot of the day-to-day tasks that a trader used to do, and thus in turn are looking at the cost of a trader and the role that the trader would play and making more sense to outsource it when it becomes a management fee versus a fund fee expense, which is huge. Outsourced trading is essentially what we're trying to mirror is what a buy-side trader would do for a fund, right? So being their eyes and ears on the street. We have certain outsourced trading clients that we do all the execution in-house using our own routes. We have other clients where we manage their wallet with the street, right? So they would say to us, we want to pay these 10 brokers. We want to pay each broker X amount. We manage their order flow for them and route their orders to those brokers and then communicate to the PM based on our relationship with the PM of, hey, I only want to be alerted when a name moves in 3% one direction or the other. Other than that, please just work my orders with the brokers I specific. So that is not totally something that's directly to prime brokerage, but it is a service that we provide within the Marex umbrella. When you think about the sort of two business lines for us, it's prime brokerage or outsourced trading. I would say there's a crossover of maybe 10 to 15% of clients that use both with us. But the majority of our outsourced trading clients do not prime with us.
Interesting.
Intro is a service we provide to both of those clients. I think of cap intro, and I think a lot of people think of cap intro as us introducing managers to investors and this investors writing a check. Yes, in a perfect world, that is what it looks like. But I think there's so much more to cap intro than just that. I always say to our clients is think about our cap intro effort as an extension of what you do from a marketing standpoint. And that may look different for all different types of clients, right? For an established fund with $500 million that has their own marketer, we're probably not going to be getting into the weeds and diving through the marketing deck in one pager with them to make sure it's telling the story in the correct way. They probably got that down. They want to figure out, how do we tap into the investors in Dubai? And we get our, cap intro person in Dubai on the line to do that. The other example would be a new fund, right? That's coming out of the gate, was at a pod shop or wherever it might be, doesn't have a marketing deck, doesn't have a one pager, has an idea, has a story in their head. And then you're sort of adding that cap consulting arm to it to help them convey their story on paper and help them with the marketing process. And then from there, stepping back and saying, okay, now we have an institutional product we can wrap our arms around, right? You've got a one pager, you've got a marketing pitch. Who within our 2,000 allocators globally looking for your strategy, right? And I think, a lot of cap intro sometimes gets thrown in with like hedge fund marketing and third party marketing. And right. And yes, some groups do it that way. I think we like to think about it in the way of our goal is to put a manager in front of an allocator that can be actionable, right? And actionable in three different ways, right? They're looking at a fund of that shape and size. They're looking at a fund in that stage of their life cycle. And then they have dry powder to put to work, right? A lot of other firms that, will make an introduction to a long only fund and introduce them to first loss capital. That's not really cap intro, right? Long only and first loss don't really work very well. So there's a lot of different ways you can think about cap intro, but that is a service that we provide to our clients as sort of those ancillary services on top of things.
And so for the cap, I'll take those. I have a couple questions about outsourced trading, but I want to start with cap intro because that's where we ended. Cap intro, it's almost, it almost sounds like matchmaking. You have a Rolodex of allocators and you have some sense of the types of strategies, the types of managers they're looking for. And then you get a new manager in the door and their strategy is X and they have Y under management. And hey, this will check the boxes for investors, 29 and 67.
Yep.
Let's make the intro.
By all means, there's definitely a mass maker element to it. I think the best cap intro I find is when you really understand what the allocator is looking for, right? And that requires getting into a dialogue with the end allocator, not just coming to them and saying, hey, I've got 20 clients. Who do you want to talk to? Versus what does your portfolio look like, right? Because you have to think about, an allocator is much like a hedge fund manager. They've got a portfolio of hedge fund investments and some are sticky, some might be turning over, or whatever it might be, and understanding where they have a need and then stepping back and saying, okay, you've expressed to us you're looking for low net biotech funds, $50 to $250 million with a performance trajectory of X. Okay, we look in our database, we look at our client's portfolio and say, here are three that fit that match, right? And then we sort of say, who would you like to talk to beyond that? From there, then we make that matchmaking. We cannot be involved in the conversation after that, for compliance reasons. But we can be a guide through the process, right? Of checking in with the investor, following the conversation, checking in with the manager. We see so many managers that will have a meeting and then just won't follow up, and chase, right? And I think, it's a lot of managers aren't salespeople by nature.
Totally.
And there's an aspect of capping or marketing that is 100% sale, right? And sometimes the most successful managers aren't the best managers. They're just the best salespeople. And sometimes the best managers don't grow their assets because they're not great salespeople, right? So our goal in working with clients is sort of trying to find the happy medium of both.
It's interesting. It's almost like you're holding managers' hands through the entire marketing process, and it's going to differ for each manager. Not unlike what I do in the legal field, where some managers will come to me with a fully baked fund idea, and some managers will come to me at absolutely square one, and we have to tailor the services depending on what that client needs. And this sounds similar.
Yeah, the same way. A client would come to us and say, we're doing X, Y, and Z. What are you seeing as proper fees for that, right? They're coming to you with the same thing. Like, how do I create a founder share class? What should it look like? All those different things. I think, we have clients that run the gamut, right? That some will show up, like you say, with a fully buttoned up marketing deck that you'll be amazed at how far they've gotten. And some will show up with 80 pages of a marketing deck where, it's on black paper and white ink. And you sort of say, okay, well, I just printed it out and now I need 7 new inch, ink cartridges, right? So like no one's ever going to do that, right? All those things that like sometimes managers don't think about that you can just sort of hold their hand through the process.
So it makes a lot of sense to me, from the manager's point of view, coming to you and looking for introductions to people who might be interested in the product I'm launching. How do you cultivate that list of allocators? Do these allocators pay you for access to managers, or is this just, that's part of the business of being, of serving the managers?
Oh, I think most institutional allocators leverage cap intro in some manner, right? And they leverage the cap intro groups on the street. And, candidly, the clientele that we work with is going to look different than the clientele that JP Morgan is going to look, right? So XYZ endowment foundation investor, whatever they might go to JP Morgan's group to look for X and to us to look for Y. But yes, that is 100%, just cultivating relationships. And I think being value add to the investor, right? I think I always say no one has to do business with the Marex. We kind of have to create the reason. And the same thing on the investor side is, no investor has to speak to us. We have to present them with value add ideas that might help their portfolio. But if you do that over time consistently, when they do have a mandate, they'll come to us and say, the people at Marex understand what we need and are not just going to send me their highest paying clients. They're going to send us the clients that fit what we do, right? So, there's a lot of things that we do that outside just calls with allocators to get an update, but we do allocator only lunches and dinners where we get 7, 10 allocators in a room and we just sort of ask questions, right? And then they sort of have a dialogue openly with themselves. And we actually did that in San Francisco earlier this year. And out of it came an interest in power trading, which we were never going to get there based on just sort of our natural conversations. But 6 or 7 mentioned, yeah, we really want to understand what power trading is, right? And light bulb goes off for us. Marex is a power trading team. All right, let's put a panel together on power trading. And then it spewed into sort of metals trading as well. And we had 150 investors on that call, right? So boom, like that's value add to the end investor, creating, interesting insight for them that they're just not going to get by speaking to X amount of hedge funds a day to day.
Totally. Awesome. And so for cap intro, is it the classic sort of, manager pays you for successful intros? Do they pay you per intro? Does it work differently for different folks?
Yeah, cap intro it's very hard to gauge that, right? Because we're inherently vested in helping a client grow for the reasons that, if we can help a $50 million manager get to $25 million, naturally the debit balances, short balances, commission trading with us are going to increase through the higher AUM, right? So there is no fee. We're not like a third-party marketer where we're going to take a percentage of the assets grown. We are incentivized by a $50 million account is going to pay us X, a $100 million account that does the same strategy is going to pay us Y. So how do we get to Y? And if we can help them
get more assets in there.
Yeah. Right. So that is where the incentive on the CI side comes.
Okay, that makes sense. So circling back to outsourced trading quickly, how does a fund decide at what point does it make sense to hire an outsourced trader? Is it, I have too much work to do all this execution work myself and I don't want to hire someone?
It's a little bit of both. I think it's PM specific, right? Some PMs, their value add is being in the weeds and being in the screens and watching the markets and trading around. And they're going to hit the keys themselves no matter what the AUM in the fund is going to be. And we see that. Other PMs find that distracting, right? Where they'll just sit there and watch the name and it takes away from, finding new ideas for the portfolio, marketing, whatever it might be, right? So it's really unique. I think it depends on the trading style of the fund too, right? For example, a fund with $10 million might trade 10 times more than a fund with $100 million if the strategy is dramatically different, right? So it's kind of dependent on what the fund looks like, how the PM likes to operate. Some PMs are set it, forget it, right? They'll give us orders in the morning and, the communication with the trader has been done multiple times beforehand where we're only waking them up, like I said, on certain alerts. Other than that, we're working their orders and they're getting fills at the end of the day. Others want to be kept up throughout the day on exactly what's going on and why it's going on. So it's it's dependent on the client. I would say our outsourced trading clients range from small hedge funds to multi-billion-dollar asset managers to university endowments to all types of investors. Because if you think about some institutional investors will hold a public portfolio internally to hedge their hedge fund investments, right? But they're not traders. It's not a good use of their time to be sitting behind the screen and working 500,000 shares of XYZ, handed off to an institutional outsourced trading solution such as ours, which can manage the order and alert them when needed.
Yeah. And so it's not, this is going to sound super stupid, but forgive my ignorance. When I thought about outsourced trading, I'm picturing a manager with a very specific strategy sitting in a room telling, the Marex employee all about the strategy so that the Marex guy can go in the back room and, trade on behalf of the fund. But it sounds like it's more, they give very specific directions, 100%. Buy this stock at X and.
Yeah. I with every client, right? A work over the day may need one thing for one PM and may need another for another PM. And that's why, the way we do our model on the outsourced trading side is to keep a very low PM to trader ratio, right? So we have 36 outsourced traders globally, which is probably one of the largest S on the street. And we keep that ratio of trader covering 4 to 6 accounts, right? So that allows the trader and the PM to really have a real relationship so that when we get an order from one trader that says work it over the day, we know that that means something different than when we get a similar order from another client that says work it over the day, right? And that's just a communication factor, just a relationship factor that we feel you can only have when you have that lower PM to trader ratio, right? If you've got one trader covering 20 to 25 accounts, being that hands-on with each order is just almost impossible, right? And thus in turn, a lot of things just get routed into an algo and you're not getting that sort of true outsourced trading model that's being sold to you. We find that that's just more successful and leads to a better relationship. I do think we never have discretion where our clients' portfolios. We do suggest hedging opportunities, right? Where, a client might come to us and say, XYZ name earnings coming up in a few days. What are some options hedging that we could put in place in and around that, right? So we would look at the option market, come back with some ideas to them, but we're never putting those on without the
They
client
have to.
final like, hey, I like this idea. Let's go that route.
Got it. That makes perfect sense. That makes a lot of sense. So how does comp work for outsourced trading? Is it based on time?
It's usually it's a service fee model, right? So in a sense, we're either, if we're executing it in-house, we're charging commission per share on what we're executing, right? But the client just says, I don't need to pay a broker. I want to, you work the order and we're working in an algo. We're charging whatever that commission we've agreed upon with that client is. If we are routing it to a broker dealer on behalf of the client to pay another broker dealer for the client, we charge a service fee to do so. Similar commission per share model. And then whatever the client is being paid by Morgan Stanley. Let's use the example of, we're routing an order to Morgan Stanley. Morgan Stanley charges that client. Their agreed upon rate is 3 cents. Our service fee is a penny. That trade is going to hit the client's book at 4 cents on a commission, right? Penny to us, 3 cents to Morgan Stanley. You're paying your outsourced trader. You're paying Morgan Stanley for access to research, access to corporate access, whatever it might be, or might be their prime. Right? They need to pay their prime.
Yep. Okay. All makes perfect sense. So switching gears real quick, I want to talk about, what makes a good client for Marex. We work with any type of hedge fund, or are there specific kinds that are like a really good fit or not a good fit?
Yeah, we're open to really working with most clients. I think, our infrastructure we've created now through our own self-clearing platform, Pershing and Goldman, is we can be a solution for a lot of different types of funds and different types of strategies. I would say the one business we don't do a ton of is the converts, but I would say now, a fund on the smaller side in $5 million and north is worth a conversation. I think it depends on, the asset classes they're looking to trade in, right? Candidly, a fund that said, hey, I've got $7 million. I want to trade in 6 or 7 frontier markets that are very difficult and I'm long only. There's very little revenue for us there, right? Because the way we're generating revenue is a debit balance, a short balance, or trading commissions, right? And that fund doesn't do any of the three really. And adding into the complexity of trading in Pakistan or whatever it might be is not something we're dying to bite off on, right? But if it's a U.S. equity options focused fund with $5 to $10 to $20 million, we can plug and play that really seamlessly into our model, right? I always sort of break our clients into 3 tranches, right? We've got a lot of those small emerging managers that we're providing that institutional solution for and providing that runway to grow. We can get into that later, but allowing them to grow their business, right? I think a lot of funds show up to you and I, and they have an idea what their fund's going to look like in 6 months. They sure know what's going to look like in 18 months. So they've grandiose ideas, but no one really knows, right? So our goal is to provide those emerging managers a runway to grow their business and provide them the tools to do so as well. On the other end of that end, we have multi-billion-dollar funds. Given that we are not a bulge bracket, the revenue number for us looks different than it does for JP Morgan, whomever it might be. And thus, in turn, we can take a bet on a long-only fund with multi-billions of dollars because we can make a little bit of money on the trading side of things, on the small debit balances, whatever it might be, where it makes sense. I would say our bread and butter of clients that really, we partner with and grow with consistently are 25 million to 500, $750 million traditional long short managers. I think In the Marex umbrella now, we've sort of tapped into more global macro funds because we have the FCM capabilities and the futures and commodities side as well. So we can do a lot more things. I always say we're open to have a conversation with anyone, because if we can't be a partner, I have a good idea who can be, or I can point you in the right direction of the right lawyer to talk to, the right admin to talk to, the right auditor to talk to for what you're doing and how you're doing it.
Yeah. And I think you and I have always had kind of a similar view on this. Like, I agree with you 100%. I always want to talk to everybody, whether they're large, small, or somewhere in between. And you just never know, in a year, their business might be very different. They might have very different needs. And it sounds like Marex has such a wealth of offerings. So you can really, you can provide useful services to managers across the spectrum.
100%. And you just never know where people are going to be in X amount of years, right? Or X amount of months, right? Or who they know, and if you offer a lending year to someone and try to help them, usually comes back to
It's going to
help
come
you down.
back.
Yeah,
It's
exactly.
going to
Right.
come back.
That's the way we look at things here. And it's always a long trade for us, right? And hopefully, I feel like we have a good, unique value offering. And is it going to be fit for everyone? Of course not, right? But for the people it is, it usually matches up nice well.
That's great. You guys doing anything in crypto?
We've started to do more in crypto recently. Out of our London office now, we will allow clients to pledge Bitcoin and we will lend against it to fund a prime brokerage account here in the US to buy US equity and option securities. I think we just did our first create and redeem with KBIT in London as well. So I always find Marex is looking at things in a way of speak with the client, understand what the client's needs are, what they're looking to do, stepping back, looking at the tools we have in the toolbox, and either plugging and play the right tool or saying, hey, you know what? We've had 3 clients that asked to do this. How do we build it? Right. And that sort of crypto offering has come out of that, where we're now providing that solution. I think we will continue to grow on that, as just sort of Marex's DNA seems to be solving solutions for, solving problems for clients with solutions that we either have or building them internally.
Great. Very exciting times. I will look forward to staying tuned on that. So last couple of questions for you. I'm a new fund manager. I'm setting up my first fund. What's the smartest thing I can do as I'm going about this process?
Yeah, I mean, I think it's creating a budget, right? It's creating a budget that is based on the actual AUM you have confirmed, right? I think the amount of managers that show up to us and say they're going to launch with $25 million that actually launch with $25 million are few and far between. Most launch with less, right? And building your business with a cost structure designed for what you have locked in makes the most sense, right? We see funds that I've talked to a fund recently that has $15 million and they're paying their admin $10,000 a month. That is not a good business, and it does not create a long runway for that fund to grow and run their business, right? So, if you've got $5 million locked or $10 million, sign up service providers that align with that revenue run rate and that cost structure. And yes, are there going to be certain times you're going to be paying out of pocket 100%? But then bake that into your own budget, right? Of how long can I do this where I'm not taking a salary because I'm running X or whatever it might be. Performance isn't guaranteed. AUM growth isn't guaranteed, right? So building the business with a 3-year runway based on those statistics is what we always suggest, right? And I always say it's a lot easier to upgrade a service provider and explain the optics to an investor of why you're upgrading. It's not that easy to explain why you're downgrading, right?
Mm-hmm.
So if that means starting with a smaller provider, do it, right? The institutional quality of service providers across our landscape, whether it's admin, auditors, outsourced CFO, CLO solutions, clients, wherever it might be, there are a lot of really good, smaller, cost-efficient solutions that work, right? That managers work with, that an institutional investor is not going to turn their head around or sort of get upset about, right? And if you have one that says, I want you to be with XYZ audit firm, and I'm going to write you a $25 million check. Okay, sounds good. I'll go make the change, right? But coming out of the gate that way, I think sometimes managers see or read something that says you've got to have the gold plated everything, or, XYZ endowment is writing you a check. Don't build it, they build it and they will come. If you have the money to do so, go for it. But if you don't, think about it in a proactive way of creating that runway for yourself, because with managers that are coming out of the gate that aren't taking a portable track record from their previous firm that they can point to, most investors are going to say, great, I love your idea. It's really unique. Go do it. Right? Show
Yeah.
me you can do it. Show me you can do it outside of the billion-dollar operation you were in before where, your computer didn't work and 6 people showed up to fix it. Okay, what happens now when a computer doesn't work, right? So all those different things that I think managers sometimes don't think about, that you're not just running a portfolio, now you're running a business, and creating the runway for your business is the most important thing on top of obviously performing and growing the assets as well.
Well, you heard it here from Harry first. Do not watch Field of Dreams before you start your fund. If you build it, they may or may not come.
Fair enough.
No, but I think that's great advice. And I think, I see that all the time too. People come to me and they say, I'm going to have a $50 million fund. I'm going to have a $100 million fund. And, we start drafting the documents and I start asking, we get toward the end of drafting the documents and I'm asking, okay, where are your investors? Who's coming in? And, there's not a lot pouring in. So I definitely agree with you that people should be realistic. Don't get ahead of your skis. Build the product that you can sustain, because that's the only way you're going to grow. And that's the only way you're going to attract those institutional investors eventually.
Yeah. I mean, institutional investors want to see 18 to 24 months of track record, right? So you got to get there at the very least. And, that's hard to do, right? And then you got to perform, right? So the last thing you want to do is, trying to perform, trying to rate assets while you've got this huge bogey hanging over your head because you got the most expensive office space in New York, right? It's just things that just think about things in the right way.
Absolutely. Okay. Last question for you. You've touched on a lot of it, and so I could probably glean what your answer is going to be, but how should I choose the right broker for my fund?
Yeah, I mean, I always say it's a firm you want to grow with, right? That I think grow with and also has the same business interests aligned, right? I think we see a lot of managers to that same point getting wooed by a big bulge bracket or a prime broker that says, we're going to help you. We're going to ramp your assets. You're going to grow. And sure, great. If you do, they will. But that doesn't always happen, right? So it's finding a partner where I'm going to be important to this broker at my present AUM size. And I'm also going to be important to them in 12, 24, 36 months if my AUM continues to grow or it doesn't grow, right? Like, I think, AUM growth is not, guaranteed, like I said, right? So making sure that, if you launch at $25 million and in 24 months, you're still 25, 26, $27 million, that broker still cares about you, right? And I think that sometimes we see that happen a lot with managers coming out of the gate, don't grow, and then they've got a broker that, isn't super interested in helping them because they're not paying them enough on a spreadsheet where they say they can get XYZ services, right? So,
Yeah.
I think candidly, it's probably your service provider you're going to communicate with the most, right? You're going to communicate, whether it's on the trading side, client service side, cap interest side, heck, a lot more. You're going to speak to your audit firm, your admin, your lawyer, right? So, making sure it's a partner for you and the business are aligned.
Awesome. Excellent advice. Harry, thank you so much for doing this. I really appreciate it.
By all means, appreciate the time and thanks for having me.
Absolutely. Okay, with that scintillating conversation out of the way, we can get to the part you've all been waiting for. The legal disclaimer. On this show, my guests and I discuss laws, regulations, and aspects of fund management from a 10,000-foot view. And nothing I say here, nothing my guests say here is legal, investment, or tax advice. Everything we say is our own personal opinion. Nobody is speaking on behalf of their employers on this show, and it is entirely for educational purposes only. If you're thinking about starting a fund or you're curious about what's involved, this show is a good resource as you explore your options. But if you're going to pull the trigger and actually launch a fund, please engage professional service providers to assist you in the process.